Hey everyone, welcome back to the weekly market outlook. This is for the 23rd to the 27th of October 2023. This is going to be the fourth week of October and the last full week in October as well. Alright, so let's do a quick recap of what's really going on last week. We actually don't have anything significantly impacting the market. We do have a few datas. We've got the Australian RBA monetary policy meeting minutes. As I said, it was pretty much a non-event. And then we have the Canadian inflation numbers, the US retail sales number. This one here comes out a little bit better than what the market was expecting. And then we have the UK inflation number staying flat at 6.7%. Market was expecting a little bit of a drop to 6.6%. Unemployment change in Australia, that actually came out a little bit lower than expected. Unemployment rate does improve a little bit in Australia, but the overall risk aversion that's been going on in the market doesn't really help out with the Australian dollar itself. Then we have the UK retail sales number. This one here missing the number pretty badly at negative 0.9%. Market was expecting a negative 0.3%. But again, overall, if we take a look at the fundamental news in the market, it doesn't have that much of an impact into the market in terms of pricing for the major currencies. Pretty much all of them, as we've been updating, has been in a 110 range or 100 pips range for the market there for the majors. All right, so this week here, we are going to be focusing a lot more on the flash manufacturing PMIs number and the services PMI numbers from the Eurozone. Focus would obviously be on the German number. Expecting the manufacturing number to improve slightly from 39.6 to 40.1. Services number, expecting a slight drop from 50.3 to 50.1, still about 50. And for the UK numbers, this one here overall still below 50 at this point in time. We do expect a little bit of an improvement overall, but not by much. And then the US number, obviously we want to focus on the manufacturing numbers here. So close to 50 previous month at 49.8. This time around, we're expecting a slight drop back to 49.5. Services PMI might dip down below 50 from 50.1 to 49.9. And Australian inflation number expected on Wednesday. At this point in time, we do expect a little bit of an increase in the headline inflation from 5.2 to 5.4%. And then we have the Canadian rate statement as well as the ECB interest rate decision. ECB and the Bank of Canada is not expected to hike at this point in time, remaining stable for Canada at 5%, for the Eurozone at 4.5%. We also have been getting comments from Fed Chair Powell last week, and this week again we are expecting more comments coming up from Fed Chair Powell. In terms of being hawkish, yeah, I think the FOMC is still being hawkish at this point in time. And then I think the key focus would definitely be on the US advanced GDP numbers, because if we take a look at the expectation on the GDP numbers, previous number was at 2.1%. This is a quarterly number, by the way, and the market is expecting a bump up to 4.3%, which is a significant bump at this point in time. So that's pretty much it in terms of the releases. I think it's probably going to be jam-packed a little bit more on Thursday with the ECB's comments as well as the advanced GDP numbers coming up from the US. But that's pretty much it from the fundamentals for this week. All right, let's move on to the currencies. Let's take a look at the Aussie USD. This one here has been flat and it has been in a range-bound market condition. We've got resistance at 63.50 to 63.75, which was previously a support area, now acting as a strong resistance. There is a very sharp 35-degree drop in terms of the trend line. Doesn't really signify that this could potentially be a descending triangle at this point in time, but we are looking at a lot more pressure for the Australian dollar. For this time around, this one here is still going to be in a range-bound market condition until we actually break significantly below 62.75. So we're still looking at around 63 cents as kind of the support area for the Australian dollar. The EURUSD, picked up a little bit, but we're still pretty much capped by the resistance at 1.0650, 1.07. We are still well supported at 1.05. We are still going to be looking at immediate support pretty much at 1.0550. The momentum does suggest that it might not turn around as of yet. We might actually see price fluctuate a little bit closer to 1.06, 1.0650. But again, it's really going to be tough for the market to reverse this position with the ongoing conflict. I think there's still going to be that risk aversion in the market. I know, even though we are waiting for October to be a little bit more seasonal return in terms of risks. And for the pound USD, this one here again expected to remain flat. We are well supported at 1.21. In terms of resistance, we got 1.22 and 1.23. Momentum still points to the downside. So any close below 1.21, that could initiate a new run to the downside. Obviously, we are going to be looking at a stronger support to come in at 1.2, which is a very important psychological price level for sterling. Dollar yen frustrations. This one here is being capped at 150. And, there was actually an intervention by the Bank of Japan in terms of bond purchases. They were capping the yield from pushing above that 100 basis points there. But so far, it doesn't have that immediate impact into the Japanese yen. The Japanese yen doesn't weaken significantly as well. Market is kind of just, holding on to around that 150 level. The intervention that happened last week, that should actually push the Japanese yen lower, but at this point in time, we're not seeing that. I think the overall tone for 150 being the red line in terms of potential intervention, I think that still plays in the mind of a lot of traders. So for now, yeah, we're still looking at that demand for the dollar Japanese yen. I think there's still room for the Japanese yen to weaken. But if we take a look at the weekly pivots here, just because of last week's range, the pivot just kind of shrink a little bit, and in terms of how far it can go to the upside, this is probably going to be very, very limited. We got resistance 1 at 150.30, we're very close to 150.25, resistance 2 pretty much close at 150.75, and then resistance 3 is at about 150.150. Support wise, we're going to be looking at support 1 at 149, and below that, obviously, we're going to be still looking at 148.50 and obviously 148. The red zone is pretty much where we anticipate a stronger support for the dollar Japanese yen. All right, let's move on to gold here. For gold, we were kind of estimating the potential projection for gold to be at about 1985. That's pretty much the level where market kind of exhausts itself at 1985. It does extend a little bit, very close to 2000 level. Didn't get to 2000 level, and overall, if we take a look at it from a technical standpoint, we actually saw a little bit of a turnaround pretty much at 1985. But now, market could come back to two support levels, which is 1960 and 1950. And obviously, when we talk about 1950, we cannot ignore 1940. And that's where the stronger support is likely going to come in for gold at this point in time, about 1940 to 1950. But the overall tone for this one here, this is already above the Ichimoku cloud. So any pullback that's well supported at 1940, 1950, that would still give an indication that, bias could still remain in the market. And considering the current situation in Gaza, it's kind of starting to spread, but it's really more of rumors here and there over the weekend. We don't actually have a lot of confirmation. There are talks about Israel shooting rockets over to Lebanon and Syria as well, and especially the West Bank situation. But at this point in time, there's not much clarification on what's really going on. I think the market's still pretty much on the edge, and the demand for safe haven is still going to be there, but I think this is due for a little bit of profit taking, a little bit of a pullback to happen for gold. But yeah, for as long as it's staying above 1940, 1950, as long as it doesn't breach that level, I think there's still going to be buyers for gold in the market. Now for oil, this one here has reached 61.8%, which is at about $90, which is a very significant level. We are now back closer to the Ichimoku cloud, very close to support area, which is around the 85 to 87 range for oil here. So we are actually looking at oil prices to stabilize a little bit. It's more of a gradual grind to the upside. We're not really looking at oil spiking up significantly. And again, this could actually be reason to how Iran is actually involved. If there's no direct implication to Iran being involved into this, I don't think we are actually going to be looking at a very quick rally in oil. But the pressure is there. Obviously, the growing concerns with what's going on over there. Traders are looking at this as a potential risk to the upside for oil, and you can see from the movement here, we're just straddling across the Ishmael cloud here, providing a very good support for now. This week we are going to start in at about 85 to 87 as your key support level. Any dip below 85, that would send signal that buyers are actually going to get a little bit impatient with the market. They're probably just getting out the position and wait until the situation develops. But if it does intensifies again and price bounces off 85 out of the 87 range, then yeah, we might actually see a potential push higher on oil. We're not going to be looking at a move towards 90. We're potentially looking at a little bit more push higher towards the 78.6% at about $90. All right, so that's pretty much it for this week. The focus would still be on the conflict that's been ongoing right now. The focus would still be on the commodity market. In terms of the major currencies, we're still looking for significant price action for the Aussie USD, the Euro USD, the Pound USD, and the Dollar Japanese yen to break out of the current range before we can signify or we can identify any significant turnaround in the market. With that, good luck for the trades, and I'll see you soon.